Welcome to the Note Nuggets podcast, where you can learn how to become the bank, build wealth, and accumulate streams of income perfect for your savings or IRAs. You'll hear from industry experts, seasoned veterans, and everyday investors. Our goal is to teach you how to invest in notes, one nugget of knowledge at a time. Here's your host, Kevin Galang.
Hello, welcome to the Note Nuggets podcast. On this episode, you are going to learn about the three types of mortgage notes that exist in the industry. You're going to hear from an industry expert with decades of experience. This is just a snippet of my hour-long interview with Kevin Shortell. If you want full access to the interview, all you have to do is sign up at the bottom of the show notes. You can access the show notes by going to notenuggets.com/different-notes. So let's learn a little bit more about Kevin Shortell. Kevin began his real estate career in 1985 as a commercial real estate appraiser. Through the use of partners and mentors, he is involved in both the real property side and the quote-unquote paper side of real estate investing. Kevin has purchased, renovated, and resold over 150 properties and transacted over $30 million in private note sales. Kevin is also known in the industry as the trainer's trainer. He brings a ridiculous amount of knowledge to the note investing space as well as the industry as a whole. Check out his podcast at kevinshortell.com to learn up-to-date news on the real estate industry that is sure to help you on your investing journey.
And there's really what I call three different funnels in the business. And mom and pop notes are just one of them. And it is a segment, by the way, that is coming back because everybody's ignored it. So it's a great place, especially for beginners and such, to get rolling on that. So the changes have been absolutely crazy. Inventory levels still, although they're not at record highs anymore, are still just massive.
Okay, so to break that down, what you just said, between mom and pop versus institutional, an institutional note would be something like a Wells Fargo originating the note at a fixed interest rate. And a mom and pop would be, let's say I owned a few properties that I wanted to sell, but I wanted that monthly cash flow. So I'll just do a seller carryback note, owner financing, if you will. Mm-hmm. And then those notes get sold. Is that a correct summation?
Yeah, it is. And there's really, the way I break it down, three different funnels, as I said. And most investors who focus on notes full time will want to tap into all three of those, where a beginner or somebody who's adding this to the regular real estate investing might just go down one funnel, and then start to build upon that. So yes, you're right. A lot of these notes are starting from bank originations, and then they're sold in bundles to big equity firms, and then the equity firms keep what they want, and then they sell off the rest. So that's one. The second one, as you said, yes, mom and pop notes. I mean, let's face it, just statistically, the baby boomers are inheriting more wealth than any time in the history of the world. And most of that wealth is in the form of real estate, but it's oftentimes real estate that people don't want. The kids have moved on, the parents now or grandparents have passed away, the house is outdated, now they have to pay property taxes or might be liens on the property, there's upkeep, and what people think might be a windfall all of a sudden becomes an expense. And they want to turn around and sell it, and they want to sell it as is. And the best way to do that is through seller financing. So that would fall under that category of mom and pop notes. The third one, though, is you have professional investors that are creating their own seller finance notes. And this could be as small as one person like yourself, or it could be a company that's done a private placement and raised $20 million. And they go out and buy properties either in bulk or individual properties. They fix them up and then they sell them. But a lot of those properties are in what we call lower price band. And banks are not really doing loans to a large degree in properties that are worth less than $100,000. So you have these professional investors and investment companies that are creating their own notes, and eventually they'll want to cash out of those notes. And that's another great funnel, if you will, to look at. So inventory is readily bigger and much, much, much bigger than foreclosures and pre-foreclosures and probates and all those things today.
There you have it, the three types of mortgage notes that exist in the industry today. If you want to learn more from Kevin's interview, all you have to do is sign up at the bottom of the show notes. The show notes are notenuggets.com/different-notes. I'll see you next week, everybody.
Thank you for tuning in to this week's episode of the Note Nuggets podcast. Be sure to subscribe to the show to get access to additional weekly value nuggets and get notified with episode updates. To subscribe, all you have to do is head over to subscribe.notenuggets.com. If you have any questions about this episode or note investing, book a time on Kevin's calendar at contact.notenuggets.com. We'll see you next week with another note nugget to add to your tool belt.